Hello, welcome everyone. I'm John Person from PersonsPlanet.com, and I really got to tell you, I'm excited about my next guest. It's Carolyn Boroden, and I've known Carolyn since, let's tell the truth, 83 or 84?
Something like that.
Okay, it was somewhere in there. 1983 or 1984, I met Carolyn, and she was running the desk for Bank America Financial Futures. BAFI was the acronym.
Yeah.
And that was at the CME Group. So Carolyn's got a long history in the commodity markets as well as the investment community. So I'm just tickled to death that they have me to interview you. And if you don't know Carolyn, she is the Fibonacci Queen. And there are a lot of people that actually follow a lot of the work that she does. She does amazing work with Fibonacci retracement, extensions, timing, and puts it all together for investors, not just for commodities, but for stocks. In fact, you may be familiar with a guy by the name of Jim Cramer from Mad Money, who often cites her work. And so I'm really proud that you're here. You've done just an amazing amount of work and have hit milestones in your career over the last, well, for a girl that's only 28 years old.
Yeah.
So, in any event. Carolyn, welcome to the Las Vegas Money Show.
Well, thank you for having me.
So, what do you think of the market and the wacky world we're in?
Tweets? With the tweets?
No, not the tweets, the market volatility.
Well,
we need market movement to make money.
Yeah. Well, you know what? What I just try and tell people is that you don't actually really have to know where the market's going to make money. You just need trade setups. And that's just the way I go at it. You know, we'll keep on, I'll keep on setting up the buy side of the market until it doesn't work anymore. And then when it doesn't work and it goes the other way, we're going to shift with the market.
Kind of like the trend's your friend until you're proven wrong.
Right.
So keep buying the dips, or in the late stage rally, buy the breakouts.
Yeah.
So with that said, can you help us with a couple things? Where do you think the market, let's start with stocks. Overall market, S&Ps for example. What do you think? Are we done? Did we hit a top here at the 310 spider number?
I think if we hit a top, it's going to be a temporary top. You know, I do have actually some timing work that is showing me maybe even this next week that we might start to get a pullback.
Yes.
But I'm not expecting it to be, a market crash or anything.
Right.
And right now, I still have been setting up the pullbacks, and I'll continue to do it until it doesn't work anymore.
Okay, so do you follow other indices besides the S&Ps?
I do follow the NASDAQ, and I do look at the Russell.
What do you think of the little feller, the Russell? That's the IWM for the ETF traders, and again, the Russell futures. So the small cap Russell 2000.
Yeah, well, that market is not extended. It does not have a similar chart to the NASDAQ or the S&P. That one, it almost seems like, and I think you may have used the word catch-up. The
condiment trade, the condiment trade, catch-up, right.
I saw that, So I think that may have more to go on the upside also. But with how extended the market is after the last, month or so, you have to be prepared for some pullbacks.
So a lot of people have been prognosticating recession this year. It's been a very volatile year. August was unprecedented as far as market opening gaps up and down. We really hadn't gone anywhere in the overall stock market in 2-year period of time. So everyone's looking at this year as S&Ps are close to 24% year-to-date gains in the spider and the S&P 500. But yet if you average that over 2 years, they forget what happened from last September to now. So we're only up on average maybe an 8% gain. So your work suggests a little more upside for the rest of the year? Or are you looking longer term?
Well,
let's define upside and timing.
Let's see.
Give us the secrets.
Not the end of this year.
What?
Not the end of this year. This year is almost over. Actually, if we look into next year, I think we still could be higher. But guess what? If I'm wrong, you get stopped out.
Right. So you're a big proponent of using stops. Stops are not for sissies, as we say in the business.
Yeah. No.
What else do you see? What other individual stocks do you like?
I had a really interesting setup that I'm going to share in my presentation, and it was from a weekly chart of Disney, believe it or not. And one of the things that I found there is what I like to call the symmetry, similarity or equality when comparing swings in the same direction.
Okay.
So I noticed that with the current decline in Disney, or the recent decline in Disney, that was almost exactly the same as 2 other swings on the weekly chart. So as long as that low holds, then I'm going to look for a continued rally. I mean, we've already seen some.
Disney had a really good move earlier this year, surprised everyone, went up close to 150, pulled back to the upper 120, 126s, had a positive earning last week, popped up to around 140. So you think it backed off that earnings, it was up 5%, came down around 3% on Friday.
That's a pullback to buy.
So you like Disney somewhere between 132 to 136?
Yeah.
And then stops underneath the prior week's low, maybe?
I would probably have it a little bit tighter. I know I can set it up tighter than that. But I am looking for a target of like, I think it's 152-ish.
152-ish.
Yeah, it's the 1272 extension.
Atta girl. Well, that's a nice little risk-reward setup. That was a nice trade for the audience there to look out. And the neat thing about Disney is also it's optionable, so people can develop some option strategies around that play.
Yeah.
That's awesome. Carolyn, thank you. And for those that aren't familiar, it's FibonacciQueen.com. I definitely encourage you to look at Carolyn's work. Thank you for joining us here at the Las Vegas Traders Expo.